We've got a Dow futures, S&P and Nasdaq futures all indicating a gain of 1% or more. The Nasdaq continues to be in the lead as we have seen that outperformance from large cap tech over the past couple of days. Let's talk more about what's going on with Art Hogan. He is chief market strategist at National. Art, it's nice to see you. Surprised by what has been going on in the markets in the wake of this election uncertainty?
Yeah, I certainly am. And what's interesting is, as we enter today, we got back to exactly in the S&P 500 where we were at the beginning of last week. So remember how bad the last week of October was, and we had the 4 of the 5 big FANG stocks give up 5 to 6%. The markets were down 5 to 6%. It was a rough month. We come into this week and start November, and we've had 3 days in a row that have been spectacular, but all very different and for very different reasons. Monday we came in and said, we've overdone this. What should we buy here? And it was the economically sensitive cyclicals that really, took off. Tuesday, I said, okay, continuation of this rally, but wait a minute, this election is changing a bit. And we think that you need to get out of the cyclicals and into technology, and all for different reasons. And here we are Wednesday and a similar type of rally. I think what the market's telling us is 3 things right now. I think it's telling us that, listen, we would have liked a blue wave because that means we would have gotten a lot more stimulus a lot sooner, and that was a certainty. And now the market is having to shift that narrative to, as much as we would have loved to have that blue wave and a large amount of stimulus right away, I think that we are going to like 4 years of gridlock where there's not new taxes, there's not new regulations. We kind of know what's going on, and that is something that market had to reposition with, right? So if not for stimulus, you need to pare back on cyclicals, and you need to get in technology because growth is going to be scarce. I think the second thing the market is saying is like, hey, we're going to know who the president is likely sometime this week. It looks like a lot of that drama may be behind us. Around the edges, we're hearing some of that, hey, I want to recount, maybe we'll go to court. But it doesn't appear as though there's going to be a likely case for that sort of 2000-esque uncertainty all the way through December. So let's hope that's the case. And the third thing I think is we have to start remembering that 2 of the 4 leading vaccines are going to give us readouts in the month of November. We're going to shift from thinking about this election whatsoever and starting to get back to what we should be thinking about is the path of this the path of this virus, and how soon we can get a vaccine out of the lab and into the hands of the people that need it.
The market has quickly shifted to this view, which you brought up. Divided government is good for stocks. Poke holes in that. Why is it good for stocks? I mean, essentially, you're not going to get anything done.
Well, what you're not going to get done is major changes, and that's a really good point. It's not that you're not going to get anything done. We'll likely see stimulus, and the stimulus likely looks in the near term like it's something the Republicans were willing to do in September. So you're talking about something between 400 and 800 billion, smaller and targeted, and then try to attack that again as need be in the first quarter of next year. But so you don't get anything done. You still have to run a government. What you don't get done is, hey, we're going to have a large increase in corporate taxes. We're going to increase your taxes. We're going to change taxes on capital gains. We've got, what looks like a Green New Deal. We're going to have a single payer healthcare system. Those are the types of large things that likely don't get done, or if they do, they take longer to do. So I think you have more of a gradualism without big changes. You have stimulus, but smaller. And I think that the market looks at that and says, okay, those things that we should kind of be concerned about are in the rearview mirror, at least, for the time being. So it's gridlock, but there's good gridlock and bad gridlock. We will get stimulus. We might even get it in the lame duck session. It's just not going to be as large as we were contemplating with the blue wave.